Oh man, so have the Fed just messed up the market now for us for the next 60 days? As you know, guys, we had the Fed chairman Jerome Powell yesterday coming out and spooking the market. Click this video if you haven't watched my video from yesterday explaining what was said and what impact that could potentially have. But now we need to take a look at how is the market responding after a good night, well, maybe it wasn't a good night's sleep, to try to digest this information. And today we've got the Dow up slightly, 1.24%, S&P up slightly, and the Nasdaq up slightly. But we're seeing a lot of our favorite stocks and crypto still react to the downside. You can see now that Bitcoin is sitting at 36,600. It's hold fairly steadily, to be fair. If you remember, what happened whilst the Fed chairman Jerome Powell started speaking was in the lead up, we started running up to 37 and a half. As the statement came out, which said we will not see interest rate hikes, we ran up to 38,000. We tried to break through 39,000, but then Jerome Powell started to speak, and he continued to speak in a hawkish tonality, suggesting that inflation was rampant, suggesting that the labor market was really strong, and basically telegraphing to the market that there's room to raise interest rates, which the market knew already, but it just went and spooked the market. The good news: rates were not hiked today, tapering was not sped up, asset shrinkage on the balance sheet was not readily spoken about just yet. That's all going to happen in March and April onward. So that is the good news, but the market is still reacting a bit negatively. You can see here we're still in this downward trend to the bottom. I just need to adjust my parallel channel there. We're still in this trend to the downside, which is suggesting, we've not managed to reverse this pattern just yet. You can see to get to the top of the channel, you're looking at 40,000. If I bring out the EMA ribbon, you can see that Bitcoin has now been bearish below its EMA ribbon for a long period of time. Now, this dates all the way back to the 18th of November. So over a month, or about 5 weeks or so, since we were bullish. So a lot of work for Bitcoin to do to the upside. And now this gets us thinking, does this mean we're going to be in a sideways market for a while? And this is important. As investors, we need to understand this because at the moment, the market is uncertain. If there's one thing that investors hate, it's uncertainty. And the next bit of uncertainty, because the Fed have just kicked the can down the road to the next meeting, is in March the 16th. Again, March the 16th, the FOMC are going to meet. They're going to have a 2-day meet, and then we're going to get the same report that Jerome Powell just did. But this time, we're expecting to see an interest rate hike. But the market is scared. Are we going to see 25 basis point interest rate hike or a 50% basis interest rate hike? These are the concerns that are now going on. The market is scared, particularly for growth stocks, okay, which is why we're seeing small caps take a hit and the Nasdaq tech stocks because they need more money, right? So these small caps are down today because tech stocks and smaller companies need access to finance. Increasing interest rates reduces the access to finance. So we're in a risk-off environment right now. A risk-off means people do not want Bitcoin on their balance sheet right now, okay? So that's what we need to keep an eye on. At the moment, I can't see any positive catalyst to the upside. So that suggests to me that we may see some more sideways action here on Bitcoin and the wider crypto market until we can resolve and get some positive news, i.e. some clarity from the Fed, some lower inflation numbers, which, by the way, will come out in February. We'll get the CPI reading. These kind of things can help settle the market and start to allow Bitcoin to run. You can see here, if I head over to the 4-hourly from a technical perspective now, you can see we got rejected exactly at our support resistance line at 38,400, which we've had drawn for a long time. You can see exactly how we got rejected off there and then perfectly bounced from our next line, which is 35,531. So anybody who's not a proponent of technical analysis, you can just watch this basic movement here and see how we're respecting the trend lines with which we're at right now. Look at how we got rejected from the EMA ribbon, which was exactly what I said in my last video could happen. We had this good move up from the bottom when we bounced from 32, but we just got rejected from our EMA ribbon, right? We bounced again off 35 and we got rejected from our EMA ribbon. But hopefully we can start trying to bottom off now. Hopefully 32 was the bottom. You can see here now the support coming in at 35 this time as opposed to waiting to 32, which overall may be showing us that the market has started to digest the Fed news, have started to look at it and go, hang on, things aren't that bad after all, are they? If we bounced from 32 before the Fed news and now the Fed has said we're not increasing interest rates just yet, is there anything long-term to be panicked about? Has anything fundamentally changed? Or is this an overreaction and should people be buying the dip? I know what I'm doing in this situation. I'm continuing to dollar cost average in on my favorite positions. I'm not going to, go all in. If you've got a certain amount to dollar cost average in, you don't want to be, and this is not financial advice, you don't want to be throwing all that into the market right now. Because like I said, I can see 60 days of sustained uncertainty in the market, and therefore I'll be very surprised to see if we get a powerful reversal to the upside immediately. If we do, great, I'm happy with my position. But if we don't, I can see further sideways action running up to 40, 41, 43, coming back down to 35, just kind of bouncing around, hovering with no real conviction in the rallies, right? Just trader action, taking us up a couple of thousand, taking us down. I can see that kind of sideways action playing out for a little while until we get some more guidance, either through data such as CPI readings or through some positive catalysts, right? Whether another country adopts El Salvador, like El Salvador did, adopts Bitcoin, or whether, El Salvador pushes back the IMF, who's trying to urge them to ban accepting Bitcoin as legal tender, some sort of positive catalyst which can help us start rotating back through the 38,000, through to 40 and 41 and a half levels. These are the important levels for us here on Bitcoin. Now, what else is important? We need to understand how are altcoins going to react in this market? Well, if you take a look at the dominance, you'll be able to see here that dominance is spiking. Now, what is the reason for this? Well, this is quite easy to explain. So in a down market, what happens is that even though Bitcoin is falling, more people are flocking to Bitcoin versus altcoins because altcoins are falling at a faster rate than Bitcoin. Okay, Bitcoin, when things are going down, Bitcoin is the safest of all these altcoins here on the right-hand side. And that is why your dominance, which is your ratio of Bitcoin versus all the other altcoins, will continue to rise in an uncertain environment. When the market's not doing so great, you will see Bitcoin dominance start to rise. Now, if we zoom out here and take a look at this on the daily chart, you can see that we did get a perfect bounce here at the 39.65 level, which we've marked out for a while. We knew that was an important level because we bounced here, we got a bounce there, we got a bounce here, and naturally we got another bounce here heading us to the upside. Now, naturally, when the market starts to pick up and Bitcoin starts to get moving again, the initial element when Bitcoin is taking its foot off the brake and starting to apply the accelerator, dominance will continue to rise because the initial gains will fall on Bitcoin. Thereafter, people will then start rotating back into altcoins, and then you'll start to see the dominance start curling back over again. Okay, so that's the behavior of how that starts to play out. If we look at the Bitcoin shorts, you can see we did get a big rise in the number of shorts here. I mean, let's just zoom in so we can see the kind of extent of this. You can see we did have a big pickup in the number of shorts leading up to the FOMC meeting. And naturally, some of those shorts now I will expect to start unwinding. Okay, if any of you followed my tweet storm during the FOMC meeting, you can follow me on Twitter at RealIjaz1. You would see that I mentioned that a lot of people were hedging their portfolios leading up to the Fed meeting. There was a lot of eyes on the Fed meeting. Stock investors and crypto investors were hedging their positions, and that is why you were seeing a lot of short positions being played out, a lot of puts being played in the market. Now that it's come out that interest rates will remain unchanged, we didn't get a shock announcement yesterday, although some people are a bit spooked by it. It wasn't a shock announcement. It wasn't that, we're increasing interest rates by 50 basis points today and we're stopping tapering today. It wasn't one of those. Now we can start to see whether the shorts will unwind, and we're starting to get evidence of that here with this big red candlestick today, suggesting that maybe the shorts are starting to cool off. So definitely something else for us to keep an eye on. Let's have a refresh of the fear and greed index. It was sat at 12 yesterday, and today we're sat at 20. So further indication that we're cooling off a little bit. People have had time to digest what's going on, and it doesn't seem as bad as we once thought, right? We're still in a good place. The fundamentals of Bitcoin are still there. We didn't lose the 32 mark. We didn't get close to the 29. Therefore, technically on the weekly time frame, we still have a higher high. If I head over to the weekly, just to finally wrap this up for you guys, so you can see all the time frames. Yes, we're still bearish on our weekly. Yes, we're still below our EMA ribbon, but we do have that higher high. Okay, if you see that low there, we've got this higher high only just, but if we can build from this and start having some green weeks, we can start falling out of this rut. But the question remains, will we have those green weeks, or will we have a couple of sideways weeks coming into this direction here before seeing some moves to the upside? Okay, so that's what we want to look out for in the market. Hope you guys found this update useful. As always, if you appreciate this blend between technical and fundamental analysis, then make sure you hit the like button and subscribe. If you haven't got yourself a VPN, guys, if you are in crypto and you haven't protected yourself, you want to check out one of our partners in NordVPN, okay? Check out the link in the description below. They are offering up to 70%, I believe, for all of you guys to go over there and get yourself a 2-year plan with a month off. So make sure you check that out, guys. It's a super cheap and effective way. It's the best platform on the market for you to protect your assets online. If you're trading crypto, if you're doing all of this stuff in the crypto market, it's really important that you're doing so from a secured VPN. I personally use NordVPN, so I'd highly recommend it for any of you guys looking for a VPN. As always, guys, thanks for watching. We'll see you in the next one.